Lucas, the chairman of the Agricultural Committee, for 5 minutes.
Thank you, Mr. Chairman. And my first goal is to make sure that we don't become history as a result of what we do. That said, Mr. Chairman, I represent essentially the northwest half of the great state of Oklahoma, a place where in the course of the last 3 years, unemployment rates have run about 3 points less than the rest of the country. We are, as you and I have discussed before in past years, a commodity-driven economy: oil, gas, wind energy, livestock, grain, fiber, on the ag production side. So I'm a little sensitive about maintaining the investment in those industries. That said, but we're a very capital-intensive district. The view of many of my constituents and the level of economic activity we have at home compared to the rest of the country essentially is, we didn't make this mess, we shouldn't be a part of sorting this mess out, it's their mess. Could you expand on your comments to both Representative Clay and to Representative Royce now, to me in that regard, what my constituents would expect in the event that some grand understanding dealing with the national debt ceiling, dealing with federal spending, if some grand understanding is not achieved, what does that do, not just alleged to the Treasury bond rate here in New York City, but what impact does that have in a place like the...
Well, the risk is, first, that interest rates will begin to rise as our creditors lose confidence in our ability to repay or willingness to repay. When Treasury rates rise, of course, that makes the deficit worse, as we were discussing before, and it makes the problem even worse. But interest rates on Treasury debt also feed into all other, including farm mortgages, including capital for oil or natural gas exploration, and including consumer loans of all kinds, student loans and the like. So it would weaken our economy, it would make the deficit worse, and it would hurt confidence and be a negative. So I think I'm very much in favor, as you've heard, of us trying to address this problem in a big way. Again, taking a long-term perspective and understanding that this is a long-term problem, but I think there would be real benefits, certainly over time, to your constituents as well as to all other Americans.
So it's fair to say then, summarizing what you've said, that if there is not an agreement worked out in a big way that has a long-term impact, not only would my constituents see a reduced demand for the commodities they produce, both ag and energy, but they would also see the interest rates that affect, because we're a capital-starved area, we'd see the interest rates that affect their ability to invest in their businesses, to grow and expand, go up. Fair statement, sir?
We don't know the exact timing of that, but ultimately, certainly that would be the case, yes.
And it's also fair to say, to back home to note, that at some point, if big, bold, tough decisions are not made, at some point the markets will begin to conclude that maybe we don't have the capacity to make those decisions, and they will begin to adopt a defensive posture. Fair statement, Mr. Chairman?
That's right, yes.
And when that defensive posture begins, then we all together see what's right around the corner. Thank you, Mr. Chairman. Yield back the balance of my time.